Crude.com and Amana Capital. Alright, it's 9:23 a.m. In London, and I'm gonna provide you guys that quick update on the markets. Sorry for running late today, having some technical issues, and that just delayed everything. It's been about half an hour this morning just trying to get any access to my computer. Sorry about that. Okay, so we're going to take a look at the markets as we usually do, but I need to stress the trading financial markets unfortunately is risky, and there's a risk that we'll lose all of our invested money. As well, please bear in mind that the webinar here with Nathan is not going to take place today. Instead, it's going to take place next week. You should receive an email about that. Of course, it will just be a new date on it, same time, but just next week. Okay, good. So let's begin, and we're going to take a look at the euro. So just so you know, in general, the dollar has been doing a little bit better, and the dollar has been giving up some of its returns. Now I suspect we're probably gonna see more of that, so more sideways in the dollar. So this trend that we've been seeing is either gonna take a break, which you already seen, or it's gonna give up some of its gains. I think giving up some of its gains is likely, and it's always difficult when you trade against a trend. So as you know, the euro is going to the downside, and now trading against that is definitely difficult. But because the market traded above the high here, I'm now short-term bullish, and I just took a fib from the low to the high, and I made some adjustments here. I was hoping for slightly more of a 50% correction, but we did not get that. But if we go back down to the 50% level around 119.09, I think traders will try to buy, and probably going to be buying here 119.09, and then stop loss just goes below last week's low, so they're looking to risk about 92 pip. And then I put another fib from the whole decline, so from this very high here in April all the way down to the low, and these are the three fibs of that move. So I suspect we could at least go up maybe to the first fib at 120.48, and then from that level maybe the traders are gonna try to sell again and do something like this. So it's either gonna do something like that, up and then down. The alternative is just we do like that in the market, just takes out last week's low, and then we just continue to go down to maybe the lows here from November at 115. So that's my outlook for the euro. Again, I think traders going to be looking to buy at 119.09, and stop probably goes below last week's low, and then up first fib, if not 50% correction. Then from these levels probably traders going to sell again. The alternative, the market just trades sideways and then takes out last week's low, and that just opens up for further losses. That's my outlook for the euro. Now you need to bear in mind, this is a contrarian move. It's what all the rookies do. All the rookies, what they've been trying throughout here is buy that dip because they're hoping for a quick bounce. Well, to begin with, my analysis trading against the trend is that you buy it, and then it takes time, many times, just for the market to go to your favor, because it needs to go down, trade a little bit sideways, spend a few days, and then it heads to the upside. So it's difficult to do it, and the risk of failure is much higher than sort of the normal trend following stuff that I do. Now here's Bitcoin, 4-hour chart, and the market was trending to the upside, as you know, creating higher highs. This is April 17th low, this is the April 26th low, and this is the May 1st low. The market took out the May 1st low and the April 26th low, took out support. From then I turned bearish from these levels, and we went all the way back up to the sell zone. But as long as we're below 9,950, I think this market could probably head down to the support level, which is the April 17th low. And I think this is gonna unfortunately be a bit of a boring period here. It's not gonna be massive sell-offs, I don't necessarily think so, unless of course the Securities and Exchange Commission decide that Ripple and maybe even Ethereum, or Ethereum potentially being a security. Don't remember the actual story why Ethereum should be considered security, but it's a likely possibility that that could be made, and that just gonna limit, because if it is a security, then it won't be, as I understand it, to be able, you need to list trade that on a regulated exchange, and obviously none of the big exchanges like Kraken or Coinbase are regulated in the US, which means that it's going to be difficult for them to offer it, if not impossible. And now the Americans would need to move their Ethereum and all their tokens to offshore. The alternative is that probably a lot of people are going to be like panicking and they're just going to sell, and then they forget about it. So that they could have an effect there where you can see Ethereum lose quite a bit, and that could have an effect. And then some other silly guy, so there was this guy, he lost like 500 pounds, so $500 trading Ripple, and now he's upset about it. And now he wants he's suing them, and he wants Ripple as well to be treated like a security. And again, that could create some serious problems. Anyhow, trading sideways, I think that's fair. Okay, and then we'll take it from there. This is crude oil. Crude oil is not doing too much, it's just trading sideways, and I want to be bullish on a break to 71.88. Take this up to the November 14th low. The alternative will go down, correct all the way to the highs, and then we'll look to buy. What else? Well, this is gold, and gold is fortunately took out that trend defining level. We had a bit of a bullish bias, up down, and we're heading to the upside, but the market just took out support down here, and there's not too much we can do about that. It just moved to the downside. If anything, what you can try to remember is that don't trade a sideways market. Sideways markets are notoriously hard to trade. That's why I don't trade them. Of course, in hindsight, it always looks great. You just buy at the low and goes up, but then sometimes you buy at the low and it spikes you out, and then it goes up again, and then it goes back down again, and it's just a lot of noise most of the time, and that's why I don't trade these markets. Now going forward, I don't anticipate like a massive collapse, but if we take out the May low in the next few days, then I'll be willing to anticipate this go to the downside. Why? Because it trades sideways for such a long period of time, so most likely if we take out the low, the market should be able to move to the downside. This is the German DAX. German DAX is at elevated levels. Check out the French stock market, even at more elevated levels. And then you have well, French stock market, the DAX, and the FTSE. They're all sort of very elevated levels. Don't really find this too interesting, but if one wants to trade, then a pullback to 12,874 makes sense. One could potentially be bullish above this little spike here, which was created on May 3rd. I think in general, of course, if you look at the Nasdaq, if you look at the Dow, we created some reversal candles on the daily chart yesterday, but if they have a 2-3 day correction, then I think that's far more interesting than buying the German DAX. Finally, let's just take a look at the pound. So the pound is not moved too much. I'm looking here at the numbers. So we just had unemployment data out about 2 minutes ago. Unemployment rate remains unchanged at 4.2, and yeah, average earnings including bonuses increased by 2.6 as anticipated, and this is also slightly lower than the 2.8 from the prior month. And it's just claim account change that was positive, but people don't actually pay too much attention to those figures. Overall, we don't really have too much happening in the pound. The market doesn't really care too much about these figures. You can see we're trading sideways between the May low and the May 10th high, and you just need a break to this range. Either a bullish break takes you up to the April 30th high on 137.92. The alternative is if we take out the May 10th low What's interesting though is those claimant counts usually when we start to trend and start to see some bullish trend to the upside, it's an indication of bad times ahead. Let me show you that. So you see here, got 31.2. That was a reading, quite strong reading, and people don't usually pay too much attention to it. But you can see here, this is 2009, which is obviously severe crisis worldwide. And you can see here, I was starting to edge slightly higher, and this is well starting to edge a bit higher. We have a problem or situation with, you know, high inflation in the UK that dented you know, people's ability to spend, because most of the things that, well, not most of the things, but a lot of things are obviously imported from Europe, in particular food, which just causes things to become really expensive, and that dented retail sales. And then with the UK as well, because of Brexit, people are not really sure, you know, if they should invest here or not, and it creates inefficiencies as well, because before you could just, you know, if you wanted to sell to the French stock market, or to the French market, or to the German market, you would just hire somebody in the UK to do that business. And now, because of Brexit, if you're a big bank, you need to break things up, so you need to relocate people to other places. And if you're going to be regulated in, say, another part of the world, Europe, well, then you need to move capital and have capital just sitting there just for the regulator, like a buffer. It's the same thing when you open up here with the FCA. So, and you might remember some, like FXCM, for example, when they got in trouble, they sold, I think it was the Hong Kong business, just because they had millions of dollars just sitting there to be able to be regulated in that part of the world. So it creates a lot of inefficiencies. I'm not sure if it's just linked to that, but you can see here that the trend is not really going in the right direction right now. Let's see what happens. Technically, again, the pound is just trading sideways, so there's nothing for us to do here. Sometimes the economic data, it moves ahead of the exchange rate moves ahead of the actual data. Good morning, Mr. Respond. And good morning, hi as well. I hope you guys doing well. Thank you so much for joining the chat box. It's always nice when people come use the chat box and say hello. If you guys don't have any questions, I think we're gonna wrap things up. Okay, so guys, we're gonna wrap things up. I want to thank you so much for joining me. Tomorrow, most likely back at 9:30 a.m. 9 a.m. Sorry, as usual. Nathan as well is back. He was off yesterday, and he just published a few setups. You have a euro-dollar setup and setup here in the pound as well. So check it out. You can find more on this on technical analysis as well. I'm gonna try to update you guys, share some of my thoughts in print here at technical analysis section. And of course, if you're new to the website, on the homepage and also obviously on the news, you find a lot of different content. One of the most popular is usually the morning update. It's a nice little update that provides a general overview of what's going on in the different currencies. And then Vivek and Deba, they will usually as well you know, provide updates on the macro fundamentals, sort of what you need to know ahead of rate meetings and economic data and things like that. Okay, have a great day guys, and thanks so much for joining me, and I'll see you guys hopefully tomorrow. Don't forget to like the video. Thanks.